Crypto wars continue with China's continued crackdown, and now U.S. regulations are looming for cryptocurrency. Regulatory crackdowns and environmental issues continue to plague crypto, so for the moment, we remain in the consolidating phase. Now, in the stock market, after a big first half, the wolves are circling the wagon, expecting reversals to be forthcoming. And finally, for new option traders such as myself, I would like to introduce to you a new option strategy to help you get your feet wet. Welcome to Money Talk Sundayz. Boom. Again, welcome to Money Talk Sundayz. I'm Stevie B. Thanks for joining this marathon to 100K with me. Hit the like, share, and subscribe button on your way in the door. I'll give you a minute to knock that out. While you're doing that, please don't forget to hit the notification bell so you can be alerted every time a new video drops. Minute over. Let's get right to it. Crypto news. Now, like I mentioned last week, cryptocurrency is being hit on all sides, and with this onslaught, nervous Nellies are abandoning their positions while they can and moving back to the regular market. China's continued crackdown on Bitcoin mining and transactions continues to hover like a dark cloud, scaring novice investors, retail investors, and more who were late to the party. You know, the people that bought in high, expecting it to keep going higher. Now, like I mentioned before, as Bitcoin goes, so does the rest of the crypto market. So today I'll only be focusing on Bitcoin, but go ahead and apply what I say to the rest of the crypto market proportionately. Now, Bitcoin traded lower on Friday, struggling around the $35,000 range. As of this taping, Bitcoin is trading around $32,400, $32,500. It's up of roughly about $1,000 from Saturday morning. Now, some analysts predict continued weakness, and charts are showing the same thing, possibly even more regression, more falling. So what has everyone shook? Well, of course, it's the Chinese market participation. Chinese markets have been selling by the boatloads during the past month, alongside the grayscale unlocking schedule, leading to more selling pressure. Grayscale, for those that don't know, is a unit of digital currency group. Now, newbies are losing profit and seeing their capital wiped out in minutes due to the selling wave, and they are exiting the game. Everybody's jumping overboard. I guess they just can't stomach this roller coaster ride. That's why they say hodl, hold on for dear life. Also, China's regulatory crackdown has accelerated the decline in Bitcoin's hash rate over the past month. The hash rate refers to the total combined computational power that is being used to mine and process transactions on the blockchain. I'll go into detail later, in another video, about the hash rate, how that affects Bitcoin, and why it's such a big deal. Now, another dark cloud that's on the horizon is the potential for tighter monetary policy in the United States. You know, with all the hacking, the ransomware, and the ransoms being paid in Bitcoin, Uncle Sam is finally going to throw his hat in the ring and do something about cryptocurrency. But don't get it twisted. This is just another excuse for the U.S. to promote its own coin, just like China. The U.S. has the USD coin and is pegged to the U.S. dollar, and thus America is fiending for a dollar rally, which will be yet another threat to crypto in the crypto space. So with that in mind, remember what I said in the last video. Institutions are going to go in big on crypto at the right price as retail investors exit their premium positions. As that right price inches closer, institutions are warming up to crypto. Bitcoin trading volumes on the LMAX digital spot exchange have surged over the past year. Because LMAX digital facilitates trades for institutions only and already is among the leading Bitcoin spot exchanges, this depicts the current institutionalization of the Bitcoin market. And this is according to a report by Arcane Research and LMAX Digital published on Friday. 70% of the 77 institutional investors surveyed by LMAX Digital expect asset managers, funds, and banks to be the most significant contributors to trading volume in the next 3 years. So what does that mean? That means they want you and I to relinquish our spots on this train and move to the back so they can drive crypto. Do not be fooled. Hold on for dear life. HODL game. Your future, your kids' future depends on it. You got crypto, you got a good amount of crypto, you see the prices fall, you see it hit the bottom, get more, because that's exactly what they're trying to do. Push us out. Anyway, on to the stock market. Now, in the stock market, the S&P 500 posted one of the best first halves ever in history as this month, June, comes to an end. Wall Street strategists never wants to restrain their enthusiasm when it is warranted, warned that the gains have played out. So, here's that FUD. The gains have played out. Short sellers are circling with wagers against the largest equity exchange traded fund rising to the highest level this year. Star investors like Michael Burry have warned of the mother of all crashes in meme stocks. GameStop, AMC, all the others. And yet, from reversals in speculative names to a hawkish shift in Federal Reserve policy, things that could have put an end to last year's rally in equities have been added. And equities have failed to do so. Instead, amid steadfast retail buying, about $6 trillion has been added to equity values in 2021, with the S&P 500's 14% rally putting it on course for its second best January through June period since 1998. Bears are getting bolder, expecting a reversal, but the bulls have history on their side. In the 27 years when gains in equities were this strong through the first 6 months, 3/4 of the time, or 75% of the time, stocks continued to march higher by December. The S&P climbed for the fourth week in a 5 as President Joe Biden's bipartisan $579 billion infrastructure deal revived leadership in economically sensitive shares like banks and energy. The Russell 2000 index of small caps jumped more than 4%, the most since March, while the tech-heavy NASDAQ 100 advanced for 6 straight weeks, the longest winning streak in 5 months. Here's where it gets juicy. Short sellers, almost driven into extinction amid an equity rally and January short squeeze, are reloading. Bearish bets on the SPDR S&P 500 ETF have climbed to 5% of its stock outstanding from less than 2% at the start of this year, according to the IHS market data. Meanwhile, demand for protection against losses in coming months is rising in the options market. Pushing against the wall of worries, here we go, are the growing numbers of retail traders who bought the dip during the pandemic bear market and have since become the staunchest allies of this bull market. A week ago, when the S&P 500 dropped more than 1%, listen to this. A week ago, when the S&P 500 dropped more than 1%, retail investors poured in a record $2 billion into equities, according to data compiled by Banda Research. The fight is on, ladies and gentlemen. The fight is on. Let's get ready to rumble. Yes. And finally, what most of you are here for, after hearing the intro, the option strategy. So here it is, an option strategy that I want to share with you guys. This strategy will allow you to double and triple your money in a week. It's powerful, it's cheap, and almost always will bring you a return. It is called the long call condor spread. It works by choosing a stock that has been trading sideways for a couple of weeks and is not really expecting any volatile movement up or down. You go into the strategy betting that the stock will end the week roughly around the same price it started the week. So how do you work this strategy? Simple. Follow these steps right here. Step 1. Find a stock that has been trading sideways for a while. Step 2. Go to your favorite trading app and go to the option plays. Step 3. Go to sell call and pick a date that is a week out. Step 4. Select a sell call right above and right below the current share price. Step 5. Go to the buy call side and select the buy right above and right below the sell call price you selected on the sell call side. That's it. That's it. It's a 4-option order. You sit back and watch the market play out. And as you watch the market play out, if it looks like your stock is going to move outside of that range before the contract expires, you can invert your option play to take your profits and exit out. Keep in mind that you don't want to do this on a stock that has news or earnings report that's coming out that's going to affect it dramatically, or that's going to has dividend that's paying out that's going to affect it dramatically. You will definitely lose what you put in. However, what you put in won't be nearly as significant as if you were running some other option play. So your max loss will be just what you put in. That's it. So anyway, that's all for today, folks. I hope you enjoyed this episode. Feel free to drop a comment below how this option strategy may or may not have worked out for you, or about any of the other information I put up in this video. As always, the marathon continues. Support the channel. As it grows, I'll be able to do more and more with the channel and get to the point of dropping more gems during the week. Maybe do giveaways, maybe go live a lot more. Who knows? As we continue to grow, more ideas may come to fruition, and I'll be able to do more, and we can do more together. Because this marathon to 100K is not just for me. It's not just for investment bros. It's not just for Marathon Nation. It's just for everybody. We all trying to eat here, not just the institutions. So anyway, like, share, subscribe. I'm Stevie B. This has been Money Talk Sundayz. One love.